in the previous video, right, we learned that we have three market directions, right? We have an uptrend market, we have a downtrend market, and we have a sideways market. We also learned that we can have a market direction to be uptrend, but the phase can be sideways. We can have the market direction to be downtrend, but the phase can be what? Sideways or uptrend, right? So we're building on that knowledge in what? In this video, we'll be adding more meat to what we learned in the previous video, right? Alright, so the market has a specific behavior, right, that it exhibits throughout every pair or synthetics forex, right, stocks, every pair or asset that has what? Candles, right? It has a specific behavior, and that behavior is that when price is moving to a specific direction, what? Whenever it moves, it will exhaust, right? So when price is moving to an uptrend, when it moves up, it will take a break, exhaust, continue, exhaust, continue, right? The market doesn't push straight away. So let's say the market going in an uptrend, moving in an uptrend, it's not going to just push up, right? It's going to move, exhaust, move, and exhaust, right? That is the behavior of what? Price on every chart, right? Whether stocks, indices, forex, right, synthetics, right? The market is always going to move, exhaust, move, and exhaust, right? So in an effort for the market to do those exhaustion, it creates a specific characteristics that you can align to what? The direction, that specific direction of the market. Right? So in an uptrend market, when price pushes up, it exhausts to the what? The downside. When it pushes up, it exhausts to the downside, or takes a break, right? Pulls back to the downside, exhaust down. Now that exhaustion is called what? A pullback or a retracement, right? So when the market is pushing to the upside, once you establish that the market direction is what? To the upside, whatever direction the market moves against the intended market direction would be what? A pullback, right? So in an uptrend market, we are supposed to what? Push to the upside. So once we start retracing downwards, right, that's when you say that, okay, this is a pullback or what? A retracement, right? So the exhaustion can be called retracement or what? Pullback. So pullback, push, pullback, push, pullback, push, right? So that's it. Now there are certain things you are going to learn that will help us know whether, okay, this is no more a pullback, but this is what? The market changing its direction. We'll be learning that, but for now, just understand the concept for what it is, that whenever the market is pushing from one, let's say from a point to another point, it's never going to push directly. It is going to what? Exhaust along the way, right? It's going to push, exhaust, which is also called a pullback. So push, pullback, push, pullback, push, retracement, push, retracement, right? So that's the same thing I've what? Illustrated here. So push, retracement, push, retracement, push, pullback, push, right? And then pullback, right? So right now, the last point that the market leaves behind before it starts its retracement to the downside in an uptrend market, right, or the pullback to the downside in an uptrend market is called what? A higher high. And the last point that the market forms before it ends that temporal pullback or retracement and continue to the downside to create another high is called what? A higher low. Very simple. Now, the higher high is the last point price forms, leaves behind before what? It starts its push to the downside, and the higher low is the last point that price will form, right? To start when once price starts pushing to the upside, that's the last point price will form before making its move to the upside, right? Now, for the higher high, it's called a higher high, right? A higher high, and then higher low, right? Higher high and then higher low. So the HH represents what? HH is higher high, HL is higher low. Higher high, HL is higher low, right? So the first letter H is to indicate what? or describe the direction that the market is moving in, and the second letter is to indicate which point or the location that point is found, right? So in this case, we are pushing to the upside, so we are high, right? We are pushing higher, so higher, right? And then the second letter is to describe where you can find that point, the location you can find that point, whether up or down. So in this case, it's at the apex, right? So in this case, you have high, so a higher high. Now for the higher low, the first letter is to indicate the direction of the market, which is high, and the second letter is to indicate the point where you can find the location where you can find that point, which is lower. So this point is located beneath, so you have a low, so a higher low, right? Very, very simple. First letter is to represent the direction of the market, second letter is to represent where you find that specific point, the location of the point, right? Where you can find that point. So that if the point is located above, right, it's a higher high. When the point is located below, it's a higher low. You can only have higher highs and higher lows in an uptrend market. That is a distinctive characteristic to the uptrend market. You can't have higher highs and higher lows in a downtrend market. In an uptrend market, you only have higher highs and higher lows in an uptrend market, right? So first letter represents the market's direction, second letter to represent where that point is located, right? Same for this, right? So when the market is pushing up, we form push up, exhaust, we create a higher high. We end the exhaustion, we push up again, we create a higher low. We end the push phase, we exhaust to the downside, pull back, we form a higher low, higher high, higher low, higher high, higher low. It's understandable. Now let's try and see whether we can look at some examples on the chart, right? All right, so we have okay, so just by looking at this, we can see the market direction is up. No two ways about that, right? So in a previous video, we were able to even identify the direction of a market by just looking at it without no higher highs and higher lows. But then these characteristics, the higher highs and higher lows, gives you an evidence-backed approach, right? You are not just seeing it. You are seeing the market is in an uptrend, or you're establishing the fact that the market is in an uptrend because you are seeing a series of higher highs and higher lows. So these characteristics, due to the market's behavior, will show you these characteristics for you to know whether the market is is an uptrend market. So without that, when someone is not even on the charts, right, and you just tell the person, oh, the market is forming a series of higher highs and higher lows, that person can straight away, when a person is a trader, he can straight away know that, okay, we are in an uptrend market, right? He tell you, okay, the market is forming higher highs and higher lows. You know that, okay, the market is in an uptrend market. So these characteristics gives you an evidence-based approach. So let's look at how it looks on the chart. We push to the upside, higher high. This is the last point the market formed before pushing down. So this is our higher high. First H telling us the direction of the market, and the second letter H is to show us where it is found at the high apex. So higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Right. So once you see these characteristics, they tell you that we are in an uptrend market. So you should be looking for buys. You should be looking to buy the market to the upside, right? So once you see a market forming or an asset forming a series of higher highs and higher lows, it's to tell you that market is it's a bullish market, right? It's an uptrend. Bullish also means uptrend. Bearish means downtrend. So that market is not a bullish market. It's bullish. It's in an uptrend market. So once you see this, when you open an asset class and you see this, so let's say if this is a pound USD chart, then you know that the pound is gaining strength against the US dollar, right? So yes, in an uptrend market, we have series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, higher lows. These are distinctive characteristics for an uptrend market. You can't find higher highs and higher lows in an uptrend market, in a downtrend market, right? Once you see higher highs and higher lows, then that's to tell you that we are in an uptrend market. So I'll be taking it part by part. I don't want to just cramp all the information in one part and make the video long, right? So we'll be ending this video. We'll continue on more on the market structure, uptrend. Then we'll be talking about the uptrend. We'll also touch on the downtrend markets and also the characteristics of a downtrend market. So summarizing everything, we've learned that the market has a specific behavior, which is push up, exhaust, push up, exhaust. And we also learned that that exhaustion phase is called a pullback. And then as a result of the market showing those behavioral signs, right, it gives us certain characteristics, right, which continuously happens on every chart. In an effort for the market to exhaust, it creates a higher high and a higher low, a higher high, a higher low, a higher high, and a higher low, right? Those are the characteristics the market creates, right? So in an effort of the market exhibiting those behaviors, it creates those characteristics. So these characteristics help us know which environment we are in, whether we are in an uptrend market or a downtrend market. So once you open a chart and you see higher highs and higher lows, then you know that okay, I'm in an uptrend market, so I should be looking for buys. Once you enter the chart and you see the market pushing down, that will be what we'll be touching on the downtrend market. We'll be talking about the downtrend market in the next videos ahead, right? So ending this video, I believe you can now identify on your chart. You can just be practicing. Go to the chart and try to identify the higher highs and higher lows on an uptrend market, right? Yes. So in the next video, we'll be touching more on the various market structure. This is the basis of trading. If you don't understand market structure, it will be difficult for you to understand the trading as a whole, right? These are the basics. So don't skip any video. If you watch the video and don't understand, watch it again. If you watch and don't understand, watch it again. You can also ask questions directly through our Telegram, right? DM and then ask questions. Make sure you understand before you move to the next video. So don't forget to like and subscribe the video, and then also leave your comment, because it pushes our video up, right? It helps our algorithm push our video up, right? So see you in the next video.